All right, so today we're going deep into AutoZone. You sent over their SEC filing and press release, hot off the presses. We're going to break down their Q1 performance for fiscal year 2025.
You know what's fascinating about AutoZone? They're not just some small operation. They are the leading retailer and distributor of auto parts and accessories across the Americas. We're talking over 7,000 stores, from the US to Mexico to Brazil. So their numbers, they're kind of a good gauge for the health of the whole aftermarket.
Yeah, absolutely. So let's kick things off with that top line number, sales. AutoZone pulled in $4.28 billion in net sales. That's a 2.1% increase year over year. Not bad, right?
Yeah.
But here's where things get interesting. Domestic same-store sales only edged up by 0.3%.
Whoa, that's pretty anemic, isn't it? Especially when you think about like the overall economy, it could be a sign maybe competition is heating up, or maybe people are just holding back on those car maintenance expenses. Definitely worth a closer look.
Yeah, I mean, makes you wonder if people are like holding off on repairs, maybe thinking about a new car, maybe even an electric vehicle.
Yeah.
But before we jump ahead, let's look at their international performance. That's where things get really interesting. International same-store sales, get this, shot up 13.7%.
Wow, they're putting the pedal to the metal. And remember that 13.7% growth, that's even after accounting for those pesky currency exchange rates. Really makes you wonder, what's driving this growth spurt? Is it like new store openings? Are they grabbing market share from competitors? Or are folks in those countries just spending more on their cards in general? And the big question, can they keep this momentum going?
Yeah, that's the question, isn't it? So we've got this interesting contrast, slow and steady growth here in the U.S., and then boom, rapid expansion internationally. I'm really curious to see how these two stories play out. Now let's zoom in on the different segments of their business. We've got the DIY crowd, the weekend warriors tinkering in their garages,
Yeah.
and then you got the commercial side, the professional mechanics, repair shops. Domestically, commercial sales saw a nice bump. 3.2%. But the DIY segment, well, it did show some signs of life compared to last quarter, but it's still lagging.
That's interesting. Seems like the professional mechanics are busy. But maybe those everyday car owners are putting off the DIY repairs. Could be they're feeling the pinch from the economy. Or maybe it's a sign of the times. Maybe these are the early effects of the EV revolution. EVs typically require less maintenance, right? So that could be playing a role.
That's a great point. Okay, so we've looked at sales. Some areas are booming, others are, well, kind of sputtering. Now let's get down to the nitty-gritty, profitability. AutoZone managed to increase their gross profit margin, which is always good news. But here's the catch. Their operating profit actually went down 0.9%. Ouch. And the culprit, rising operating expenses. Yeah, this is where things get, so we got to put on our detective hats. Shrinking operating profit, even with sales growth, that's a yellow flag, suggests that AutoZone is facing some cost pressures. We need to figure out what's pushing those costs higher. Is it labor, supply chain issues, something else entirely? Getting to the bottom of this is critical because it directly impacts their net income and earnings per share. Yeah, speaking of earnings, AutoZone reported diluted earnings per share of $32.52, just a hair lower than last year's $32.55. Not a huge drop, but a drop nonetheless. Now let's talk about what AutoZone is doing with all that cash. They've been buying back a ton of their own stock. This quarter alone, they spent $500 million to repurchase 160,000 shares.
Share buybacks, always an interesting strategy. It can be a sign that the company thinks their stock is undervalued, they're confident about the future, shrink the number of shares available, each remaining share becomes more valuable. But it can also be a way to artificially boost earnings per share without any real business growth. Definitely something investors should keep an eye on.
Absolutely. Now, before we move on, let's talk about inventory. It jumped up 8.7% year over year. I know that might sound like a lot, but AutoZone actually has a clever way of managing their inventory. They use something called net inventory.
Yeah, think of it like this. AutoZone's basically running a giant library. But instead of books, it's car parts. And they're constantly borrowing parts from other libraries, their suppliers, to keep their shelves stocked. That's net inventory in a nutshell. It's the value of the parts on hand, minus what they owe their suppliers. So even though the inventory is up, they're not necessarily tying up a ton of their own cash.
That's a great analogy. Helps to understand how they're managing things behind the scenes. So we've got sales growth, some good, some not so good. We've dissected profitability and those rise in expenses, and we even tackled that fascinating world of net inventory. But there's one more piece we need to examine. What does the future hold for AutoZone?
Yeah, that's the big question. And to be honest, It's a bit of a mixed bag. We see some strong indicators. International business is booming, commercial sales are healthy, they're playing the financial game strategically. All good signs.
Right. But there are some storm clouds on the horizon, too. That sluggish DIY segment is a little worrisome, and those rising operating expenses could start to eat into their profits if they can't get them under control. Plus, we can't ignore the elephant in the room. The auto industry is undergoing a massive transformation. EVs are becoming more mainstream, ride-sharing is on the rise, and autonomous vehicles are looming. All of these trends, they could really shake up the aftermarket parts industry.
Yeah, it's a classic case of opportunity and uncertainty, swirling together. Can AutoZone adapt quickly enough to stay ahead of the curve? Can they use their vast network, their supply chain, their customer relationships to carve out a new niche in this evolving market?
It's like watching a high wire act, isn't it? Balancing on a tightrope. Amazing potential rewards if they succeed, but a long drop if they stumble. What do you think, listener? Based on what we've uncovered so far, do you think AutoZone is on track for long-term success? What challenges and opportunities do you see ahead for them?
I think this is where you got to put on your analyst hat. Do some digging. Explore those industry trends we talked about. Research AutoZone's strategic initiatives. And most importantly, form your own conclusions. Because at the end of the day, that's what the deep dive is all about. Equipping you with the knowledge and the insights to navigate the complexities of the business world.
Well said. We've covered a lot of ground today, but we're not done yet. In part 2 of our deep dive, we'll explore some potential scenarios for AutoZone's future and discuss the broader implications for the automotive aftermarket. Stick with us.
You know, as we dig deeper into these numbers, there's one figure that really jumps out at me. AutoZone's net inventory per store. This quarter it was negative $166,000.
Negative inventory. That sounds like they're running on fumes. How can you have less than zero of something? It's like having a negative number of apples in your basket.
Yeah, it's not quite as paradoxical as it sounds. Remember that analogy we used earlier about AutoZone borrowing parts from their suppliers? Like a library borrowing books.
Right.
Well, in this case, they've borrowed so many books that the value of those borrowed parts actually exceeds the value of the parts they have on hand.
So they owe more to their suppliers than the actual inventory they're sitting on. That's a pretty bold strategy, isn't it?
It is. It's all about cash flow. By maximizing their use of supplier credit, AutoZone frees up a ton of cash that they can then use for other things, like opening new stores, investing in technology, or even buying back more of their own stock.
So they're essentially stretching their dollars further,
Yeah.
leveraging those relationships with their suppliers. It's like running a business on a supercharged credit card, but doing it strategically. I'm starting to see why their CEO is so optimistic.
Exactly. It's a sign of savvy financial management, and it's definitely something investors should pay attention to. But, there's always another side to the coin. This strategy could backfire if interest rates spike, or if their suppliers suddenly tighten their credit terms. It's a calculated risk.
Yeah.
But it seems to be paying off for them so far.
Okay, so we've covered a lot of ground here. Impressive international growth, sluggish domestic sales, rising expenses, and that intriguing negative inventory strategy. But now we need to shift gears a bit and look at the bigger picture. Is AutoZone really as well positioned for future growth as their CEO claims?
Well, that's the million-dollar question, isn't it? And to be honest, I think the answer is a bit of a mixed bag. We see some strong indicators. Their international business is booming, commercial sales are healthy, and they're clearly playing the financial game strategically. Those are all good signs.
Right, but there are also some storm clouds on the horizon. That sluggish DIY segment gives me pause, and those rising operating expenses could start to eat into their profits if they can't get them under control. And then there's the elephant in the room. The auto industry is going through a massive transformation right now. Electric vehicles are becoming more mainstream. Ride sharing is on the rise. Autonomous vehicles are on the horizon. All of these trends could really shake up the aftermarket parts industry in a big way.
It's a classic case of opportunity and uncertainty, all swirling together. The question is, can AutoZone adapt quickly enough to stay ahead of the curve? Can they use their vast network, their robust supply chain, their strong customer relationships to carve out a new niche in this evolving market?
Yeah. It's like watching a high wire act. They're balancing on a tightrope. Amazing potential rewards if they succeed, but a long drop if they stumble. What do you think, listener? Based on what we've uncovered so far, do you think AutoZone is on track for long-term success? What challenges and opportunities do you see ahead?
Yeah, this is where you have to put on your analyst hat, do some digging, explore those industry trends we talked about, Research AutoZone's strategic initiatives, and most importantly, form your own conclusions. Because at the end of the day, that's what the deep dive is all about, equipping you with the knowledge and the insights to navigate the complexities of the business world.
Well said. We've covered a lot of ground today, but we're not done yet. In the final part of our deep dive, we'll explore some potential scenarios for AutoZone's future and discuss the broader implications for the automotive aftermarket. Stick with us. You know, it's kind of wild how AutoZone's story, it really does reflect those bigger trends across the whole auto industry.
Yeah, like a microcosm, right? The changes, the challenges, the uncertainties, all swirling around the future of mobility. On the one hand, you've got strong demand for vehicles, especially in those emerging markets.
Which is fueling AutoZone's international success.
For sure. But then there's that looming question mark, right? About the long-term impact of EVs, how that'll reshape the whole aftermarket parts landscape. Fewer moving parts, less maintenance. That could be a real game changer for a company built on selling traditional car parts.
It really makes you think, can they adapt fast enough, evolve, keep pace with all these changes? Can they use their current strengths, their network, their supply chain, their relationships with customers to, carve out a new space in this evolving market?
It's like, what could that evolution even look like? What if AutoZone became more than just a parts supplier? What if they became like a one-stop shop for all things automotive, a trusted advisor for everyone, no matter what they drive? Gas guzzler or a Tesla. Oh, that's interesting. Imagine them offering workshops on EV maintenance, partnering with charging station companies, maybe even developing their own line of EV-specific products.
Wow, you're talking. That's the kind of forward thinking that could give them a real edge. It's about anticipating the future, right? Being proactive instead of reactive. Not just selling parts, but selling expertise, peace of mind. A seamless experience for car owners in this new world.
Absolutely. And that kind of brings us back to our original question, is AutoZone well-positioned for the long haul? I think the answer is, it depends. It depends on their ability to adapt, to innovate, to embrace the changes that are already happening.
Well said. We've explored a lot of information today, listener. We unpacked sales figures, dissected profitability, thought about the impact of EVs, even went into that world of negative inventory.
But the real takeaway, it's not just about memorizing numbers or trends. It's about developing those critical thinking skills to analyze, to ask questions, to come to your own conclusions.
Exactly. So as you keep following AutoZone's journey, remember these points. Understand both the financial and the strategic side of their performance. Think about the bigger industry context and that power of critical thinking in a world full of information.
And most importantly, stay curious. The more you learn, the more you realize there's always more to discover.
That's a great point. And on that note, I think we'll wrap up this deep dive into AutoZone. Thanks for joining us, listener. We'll catch you next time for another deep dive into the world of business and finance.